welcome to the Closing Beat, everybody. Happy Monday to you. Hope you had a good weekend out there. All is good. Some crazy weather here over the weekend, but nice today. Not complaining. We are financial advisors here at Jazz Wealth, financial advisors for people who don't think they can have financial advisors. You can see everything you need to know on our website there, jazzwealth.com, including our fees. Everybody gets paid something, and we don't try to hide it. You just see it. Right? Good value, not a good value, you make the decision. We also have a lot of clients actually used our high interest savings accounts. So we do that through Goldman Sachs. It's not the Marcus one, it's actually higher, 5.25% is the current rate. And actually, if you care, let's try that. Nope, we're on the wrong thing here. Let's go over this way. Now it has an app, right? So whether you're doing the line of credit through your brokerage account or you want to have a savings account, you can actually have an app now. If you care, you can participate in that. Just let us know at Jazz Wealth. We don't charge for it. So it's just part of what we do there. Our Wine and Wealth class last week was the March Financial Focus. Each month we're going through something saying, hey, don't make your life stressful. Just pick a couple things each month. Go, hey, I'm going to knock this out. I'm going to figure out where I stand. Get some help, of course, from us if you need it. And so you can check that out. It is live is the recorded version now is in the dojo. You can check it out there. Also, every week I do an email for clients. Well, somebody here does an email. I usually do it. And this last weekend was like, I got the best feedback ever, like a lot of feedback. Usually people just go, hey, cool stuff, whatever. I got a ton of feedback on that. So really cool. Maybe taught me a few things there. So we'll see. Let's talk about the stock market because that's what we do here. We're not short-term traders. We're long-term investors, but like to keep up with the day-to-day, what's going on in the market because, hey, did you notice exactly what happened last week? So we talked about the stock market last week, that 5-day stretch being one of the weakest of all 5-day stretches, not from like the losses, but just nothing really happens. The average performance or the annualized average performance over the last 10 years for the stock market over the last 5-day stretch was down 0.39%. What did we do last week? Down 0.26%, right? Wasn't that cool? Right? It's not a lot. I know. It's something that if I can point it out ahead of time and go, hey, don't know why, but this is kind of a seasonal weak spot for the market. Maybe not the best idea to get too excited, go jumping all over stocks, investing large sums of money. Maybe you just take a little break and let it play out. It did almost perfectly exactly what the average is. That is so cool. Now, that's what we like here. We like doing different types of, using stats and odds instead of going with, our beliefs on what a stock may do or something. So a lot of cool lessons there. But anyways, the S&P here today. Nothing really interesting to write home about. The S&P down just a fraction of a percent. And why? It's because of the big stocks. They didn't participate. There wasn't anything there for them to get going. Look at NVIDIA, by the way. I just want to point this out real quick. Down a little bit more today. But NVIDIA on Friday had a 10% range from high to low. Right? It was up about 5% at one point. Then it was down 5%. So 10% range, right? Whoa. When was the last time that happened? Actually, you got to go back to 2017 to find the last time that happened when it was just a little tiny, like $90 billion company, and it wasn't really, what it is today. Nonetheless, you have a rocket ship of a rally in NVIDIA. It's hard to get people to consistently pay more and more and more for the stock. This AI-driven rally, obviously it has legs, but what is it going to do? How far can it go? Now, here's the cool part, and I pointed this out in our Notes from Jazz email. I just want to share just maybe one little piece with you here. I pointed out the level of participation in the stock market. So, I don't know, that's not the right one. Okay, so in the stock market, there can be moments, just due to how the S&P is weighted, there can be moments where the top 7 stocks, right in there, can pull the market higher. The rest of the stock market can be flat, and some of them can even be quite lower. So there's those moments. And then there's moments where the broad market, all 505 stocks, just grinding higher. They're all participating, 80, 90% of them, right? And there's these moments where this happens where you want to pay attention to who's causing the market to go higher. If everything is going higher, okay, I want to be an index investor. I want to be I want to be dollar cost averaging. I'm happy to participate. Yay, this is exciting, right? Well, we had previously seen where the light blue line is the participation, right? So there was a lack of participation in the stock market broadly. This is the advanced decline line if you're interested in plotting your own thing. The dark line is the S&P 500. Well, this year is a little bit different. For the most part, in the extreme short term here, the majority of stocks in the stock market have participated in this rally. And that's what you want, right? As a longer term diversified kind of investor, you know, all the words we're supposed to use, you want to see that. And that helps create these, what do you call them? Slow, boring, not too excessive uptrends there that can just go and go and go and go. It's changing a little bit, but I thought I'd point that out. If you look at the tech sector there, the tech sector is this year the most popular sector. How do we know that? Is it the best returns? No, right? There could be sectors that are doing better. In this case, it's not. But what sector, or how can we tell which sector is the most popular? Well, one of the things we can do is we can look at the money flowing into it, the new money going into each and every sector in the stock market. So, for example, up at the top, this year, just year to date, $22.13 billion moving into tech. They win, right? Obviously, is the one there. Healthcare, very interesting to people, right? So about $6 billion of new money moving into the healthcare sector. As you work your way down, you see people are not so interested in financials and, utilities and energy, still a little not convinced there. $2.5 billion has actually moved out, probably going to tech, right? So that's how we look and see, on a quarterly basis, usually, what sector is the most popular. If money's flowing into it, well, what is it doing? It's flowing in. Those are buyers. Those are supporters of the sector. That's great. We want to see that. What happens when there's some profit taking there? That becomes a bit of a problem. So when you start looking around at, NVIDIA is an example here in the short term, but if you look at something like Apple, Apple was at one point down 10% from its highs. Profit taking, right? People taking the money, putting it somewhere. Hey, I want to be in the AI stuff. That's what's going on in the stock market right now. It's really, really kind of fascinating. It almost feels like a turning point. I don't want to say like, oh, we're going to crash, but like a turning point as to, hey, I've put too much money in AI. My brokerage statements, my advisors, manager, whoever you have working with you is going, hey, what are you doing? You got too much money committed here. We need to make some changes. And so you start to see that around the market. That's what I mean by a turning point. Anyways, if we go over to the NASDAQ, a little bit quiet here today. The NASDAQ was the second worst performing index today. It was actually the Russell 2000 that was the worst. But the NASDAQ just sort of taking the day off, waiting for the inflation numbers, waiting for these AI stocks to give their little pullback like NVIDIA. It's hard to get the NASDAQ to go higher without that. One fun fact, we'll throw a little fun fact at you. It's officially been 15 years since the financial crisis low. It was actually on March 9th, if you go back 15 years. The NASDAQ's annualized returns since then, in this 15-year window, have been 123% a year. Does that sound like I'm lying to you? Does it sound, what is this guy? This is kind of data he's got. Remember, I'm just saying over the 15-year period, if you take the total returns, like 1,900 and something percent, divide them by 15, you get an annualized return of about 123% a year. That is first place, and the tech sector is largely to do with that. It had about a 1,900% gain as well. But if you look at the S&P, the annualized returns over the last 15 years, 63%. That means the NASDAQ won. Oh, Dustin, you can't beat the S&P. That does. How does the NASDAQ do it then, right? So it is possible. But the reason I'm pointing this out is because those returns are well above average relative to itself. The 63% returns annualized for the S&P over the last 15 years, those returns are much greater than what it normally does over its lifetime, right? About 10.1%, depending on if you go all the way back to the beginning or wherever you stop. So the point of this is, would you rather just buy willy-nilly? Dollar cost averaging, I understand that, right? Our 401ks, IRAs, all that stuff. We just putting in money, I get it. But if you could have big chunks of money, would you rather buy on pullbacks, however severe they may be, or would you rather buy new highs? I'm excited. This is great. The market's never going to fall again, right? No, think about it that way. We want to discount everything in life. We want to buy cheaper than the other person, than our friends. We want the better deal on the car. We want the better deal on our groceries, whatever it is that you shop for. In the stock market, the same thing is true. You are rewarded for buying weakness. It's very hard to do. I know it. I get it. I'm dead inside. So I just can do it, right? But you're rewarded for buying weakness. So when times are good, you think dollar cost average, offense. What can I do to make the most of this market as it's going up? Now, when the market pulls back, oh, shoot, I want to be more aggressive. If you can, I want to switch my investments. I want to go to something that is more aggressive, that will bounce first, that is more attractive to buyers when there is a pullback. So those sort of thinking points there, just hope to pick on you a little bit so you start thinking ahead. Because when the market pulls back, if I tell you the same exact thing I just did for the last minute and a half, you won't do it. Right? You're emotional. You're watching TV. Oh my God, Biden said this, Trump said that, the other people that were, bickering, oh, they said something too. No, you're emotional. You can't find that level of aggressiveness. So think about that when the market's going up. That's kind of my focus for the day for you. Because it's going to come. We're going to have a pullback. There will be many over the rest of your life. Hey, I mentioned the Russell 2000 being the weakest of the day. It's okay. It was the best performer last week, or over the last couple of weeks. And so a little pullback there is fine. It was really in the, so small caps, that's the Russell. It was really in the growth stocks, right? So everything else was a little bit weak as well, but the growth side of the Russell is the most volatile and has been the most volatile. So if you're investing in like an ETF that's a Russell 2000 growth fund, you're going to see a little bit more volatility there. It's okay. Hey, if we look at bonds, the rally over the last week here has taken us back to the top of the downtrend. There's really no significance to this. If you're a technical trader, it's fun to look at, but this is all I'm talking about. You see what's happening here? Oh, there we go. We're going to go like this. Hey, okay, we've got a downtrend. The rally has taken us back to the top of that downtrend. And so it's known as like a temporary ceiling, a thinking point. Right? Let's digest the rally that we just had. And you could see it over the last couple of days, almost how perfect it is, where people said, I recognize where we're at. I don't want to be the first person to buy and assume it's going to go above those highs. Certainly hope it does. But just in case it falls back down to the bottom of this range, I'm going to hold tight. And that's the mindset there. You can even verify this by looking at the volume. There are less and less participants, trades, buys and sells, at these technical levels. So there's no magic sauce to saying like now, oh, it's going to fall. We don't know. It could go up. It could break this, take off like gold. Look at gold. We'll look at that in a second. Or it could just stay sideways and drift a little bit lower to the bottom of this range. So there's no odds that tell you there's a 90% chance of it going lower, higher, whatever. It's just an area to look at. You know that at this point in bonds, you do not expect to see lower rates. Well, that would mean that the price is going higher, right? We do not expect to see rates going lower and prices going higher. It's a welcome thing if it does. But for the moment, let's just maybe look somewhere else. Hey, we said gold a second ago. Let's go take a look over there, right? Gold, this is a great example. I talk about each commodity has its own personality. And this is true over the lifetime of the commodity being traded on exchanges or futures or whatever you do. Gold has a fits and start mentality. It goes through these fits and then blast off. And then there'll be these little pauses, sideways, and pull back, or blast off again, or whatever. So gold is really tricky. You have to, and this comes from decades of doing this, you have to be willing to let money sit idle in gold for a little bit in order to participate in this stuff. You can't. There's no way you could tell me like you would have bought like right in here. Okay, great, right? Gold does this, whereas oil historically is more trending. It doesn't mean it's beautiful and perfect, but when oil starts a trend, it's usually very hard to get it to turn around. Here's a long downtrend. We've got at least a decent length uptrend here. Last uptrend. It's very rare to see this, right? Where it can't make up its mind. So in other words, if you're an oil investor, you're playing the flow. Being a counter trend investor in oil is really, really difficult actually. Anyways, so that's that. Just a quick look around the market with some different details to share with you. Our notes from Jazz was really good this weekend. I thought it was okay, and then the feedback I got was like, well, okay, people really like this. I'll take it. Hey, let's look at some stocks in the news here, and I'll take your questions if you have any questions. Let me go back. There we go. All right, there's a handful of stocks in the news, actually, to talk about. Applied Materials. So this is one of the semiconductor stocks that's enjoyed a nice rally as well. Overbought to the extreme, right? You don't want to chase it. It's pulling back just like NVIDIA and many of the others, especially in the semiconductor industry, not sector. Anyways, they said, hey, we're doing great. We're making a lot of money. We're going to make our dividend instead of 32 cents. We're going to make it 40 cents there. And so there you go. That's what was in the news there. I didn't get a chance to read all about this here, but Boeing, there's a bit of an investigation going on there as to why the door fell off the plane. They're not supposed to fall off the plane, but in this case, the door did fall off the plane. I don't know why that's new news that there's an investigation, but I, again, didn't catch it, but it did affect the stock today. If you look at Alphabet here, didn't really affect it today. X, right, formerly Twitter there, is looking to compete now with YouTube. Right? These guys here, they want to do long-form video content. They want to have a platform very similar to that. It's a really cool article if you want to read about it. I believe it was Fortune magazine over the weekend. Probably. Just look it up. So really cool there. And you would think, okay, that's going to affect Alphabet here a little bit. Didn't really bother it too much today because it's just a thought, right? They're just working on it. You don't just garner that much attention and all those subscribers and all that stuff on day one. But hey, we'll try it out. If it comes out, we'll take a look. Lind, by the way, really interesting. So Splunk is bought by Cisco, right? Is that deal done? I think the deal's about done. What's this date here? The deal's almost done. Anyways, so it can't be in the NASDAQ anymore because it's going to be Cisco now, or part of Cisco. So Lind makes its way into the NASDAQ. That put it to new highs here today. I found that interesting. It's more basic materials, chemistry kind of a company here. That's weird, but it's going into the NASDAQ, so that caught me. Remember MicroStrategy? They came up with this deal, it's been a couple years, where they said, hey, we're going to take the money that we have that's extra, and we're just going to buy Bitcoin. Yeah. That's what we're going to do. So they recently have just announced that they have now 12,000 Bitcoin, and they've spent $821 million on this through the month of February into yesterday, right? Obviously, Bitcoin has had a recent rally here, and that means that they have well, think about it this way. You have a company that does software. All right, you're making your software really cool what they do. But then you take the profits that you have and you just buy Bitcoin. So whatever, we're just going to have this position. That's what they did and have been doing it. So when Bitcoin goes up, whose profits are bigger, right? Kind of cool. I thought it was kind of cool. I'm not really a Bitcoin fan, but I thought, well, that was risky. You took your shot there. Tesla in the news as well for the German factory, the arson, supposed arson there. They cut off the power. The power should be back right now as we're talking, right? So back in the news. And you're not going to see anything here, but Reddit, RDDT, Reddit, the actual company, Reddit, is officially going public after all the rumors and filings and everything. They going to do about $750 million in offerings. That puts the company valued about $7 billion. Reddit, right? So expect to see shares somewhere priced around $31 to $33, $34, somewhere in there, to give you that idea. What else do we have? Oh, new proposals, Biden, right? We got the new budget proposals there. I go through them. I'll look at it. They're just proposals. It's going to have a hard time getting through a really, really divided Congress right now, so nothing's official. One thing that really bothers me, 25% tax rate on unrealized gains for rich people, right? You got to make over $1 million, I think the proposal was. So imagine this. You're a millionaire. Good job. You worked your butt off to get there. And you have investments, and those investments grow 20% in a year, right? And let's say it's $1 million. You got a $200,000 gain in your portfolio. You're going to have to pay tax on those gains, even though you don't have the gains just yet. You know what happens? That bleeds down to people. Oh, well, wealthy people are, maybe they make $600,000, $400,000, $200,000. Hey, why don't we just make this a rule that if it's an unrealized gain, you owe us taxes, right? I don't agree with that one. How about politicians get taxed 100% if they can't pass a balanced budget? Why don't we all choose to get mad together and go, no, we don't like that. We don't want that. You guys work for us. We would like to tax you guys if you can't stop spending all of our money. How do we do that? Somebody want to put that together? Who wants to run for something? Anyways, that one frustrated me because I get it as, oh, tax the rich. That's a good argument to make to the general public. However, that's not really the answer. That's a big mess if you really think of the process there. Remember, SMCI, I saw it was down a little bit today. Last one we'll talk about here. SMCI, rocket ship rally here, of course. The outlier AI stock and chip stock there, getting added to the S&P, right? And that's all going to happen soon, on the 18th, right? So it is what it is. All right. I'll take your questions if you have any questions, which maybe I got you fired up about the politics stuff. I'm going to do that to you guys. I'm just going to throw stuff out there and then just leave. Yeah. Yeah, not this again. Unrealized gains on, or taxes on unrealized gains. Yeah, I remember last time it was slightly wealthier people. This time it's still wealthy people, but not as wealthy. It's interesting. Yeah, we'll see. I'm not for it. And I get it. You cater to the, you can make the arguments, whatever you want. I don't like the idea of going for taxes on something that I haven't made a profit on yet, or you, or whoever these people, the rich people. Because there's no need. Let's just stop spending money on, like, hey, we're going to see the impact of bees at highway intersections. Anyone else do that? Yeah. Yeah, you get your write-off on your losses up to $3,000, but those unrealized gains, I mean, it's going to offset that pretty quick. Yeah. Hey, Jay says, is it a good time to look at mortgage, REITs, mortgage REITs? I see. Okay. So, remember, these are the different space right now. It's going to be very volatile because, remember, you have just something flying around. You got rates all over the place there. So just a little heads up on that. Now, year to date, that area of the market is the worst performer. Real estate, right? So it's the worst performer. So if you're looking for, and you're okay with a little bit more volatility, and you want that discounted area, I can't argue with that. But just as long as you know that's what you're getting into, that'd probably be the main thing I'm supposed to say as an advisor. I saw the TikTok getting banned thing again. I don't know. I don't follow that kind of stuff. I saw that pop up, but those kind of things I don't read. It doesn't do anything for me. But anyways, Fern, 6 month to 1 year T-bill, 5% state, tax-free versus 5.25 savings at Goldman Sachs there. It's okay. So state tax-free. I don't know if you live in California or something. Federally taxed, yes, right? Still have an issue there. You could also look, now there's an argument to be made between saving in a money market fund, what do they call it? The Goldman Sachs at 5.25, and being taxed on that interest, or finding a municipal fund or a municipal bond that maybe, definitely pays less, but the after-tax benefit just weighed next to each other. Would it be a better return to get less interest tax-free, or would it be a better return to get higher interest that you pay tax on? I don't have the answer to that question because I don't know your current effective tax rate. I don't know. I can't guess that for everybody here. So as a general question, I would say you have to put those two together and go, you're better off getting 4.1% tax-free than you are getting 5.25% with state and potentially state and federal taxes included. Yeah. Yep. And I don't know, I wonder if that'll apply to people. Unrealized gains for like a money market fund. No, that wouldn't be gains. Okay, never mind. Yeah. And you get the argument there. So the political argument is, hey, wait a minute. You rich people, you have, hundreds of millions of dollars invested. It's growing. And rather than take the unrealized gains, they come and do this fancy stuff over here. They say, oh, I'll just borrow against my account. If I could borrow at 6, 7, 8, 9% interest, that beats the heck out of the new 39.6% tax rate you're thinking about pushing on me. So, yeah, I'll pay that. And that's what they're combating. So I get what they're trying to combat there. I'm not, I'm lost in that. But anyways, shipwreck found in general is not worth it. They pay you. Oh, you're looking at other stuff there. Yeah. Yeah. There's a lot of different, and it's great to have choices these years, this time of year, right? A couple of years ago, you had nothing. I was like, where do you get the highest yield? Do you know that the S&P was the highest yielding product on the planet at one point at like 1.2% interest or dividend yield? So you had to take all that risk to get a negative actual return. Really tough. So I'm glad we don't have that anyways, but that's where we're at. Okay, gonna wrap it up there and go do my thing. Hey, we're campaigning for clients. It's a fun way of playing the political game there. And so we have a series of videos that will be coming out here, little commercials to kind of make fun at politics, but also, you know, campaign for new business there. So I'd like to share mine with you. Adios.
The financial world needs somebody they can trust, and also somebody who is professional.
You have a left hand and one in your right hand. What do you have? Frosty's full attention.
Eric Powell is not professional. Eric Powell is a radical political insider, despite saying that he isn't. He also definitely has ties to the Illuminati. He's on the record being a radical West Coast elite.
So I actually lived in Los Angeles for nearly 2 years.
Let's hear that again.
I lived in Los Angeles for nearly 2 years.
Unprofessional, political insider, West Coast radical elite. Dustin Tibbetts is the Southern gentleman you need, and a man of the people. Justin Tibbetts, a man that would never cross the line with a joke, and more importantly, always money first.
I'm Eric Powell, and I approve this message.